Good morning.
Good morning.
We'll just wait for the participants to join in and then start in some time.
Yeah, sure, sir. Sure.
We wait for a minute or so, allow the attendees to join in, and then we start in a minute or two. Yeah, Piyush, I think we can start. Saurav is also there. So we can start now.
Okay, thank you. So, good morning, everyone. Thank you for taking time out in a Saturday morning and attending this event. We also have Saurav Ghosh, founder of Giraffe. He's pretty well known, at least here in Calcutta. I know people have already started trying out his product, and people are very happy with the investment opportunities that he brings on. So let me begin by introducing myself. I'm Piyush Rakecha, founder of Royal Eastern Financial Services. So what we essentially do is we are into financial planning and wealth management. We provide investment solutions which are goal based. So goal based investment solutions is the thing that we are in, and I've been working on this for the last 7 years, and happy to share with the support and assistance of all my investors. I have AUM in excess of 80 crores today. My brother Nitish Rakecha and my sister Nidhi Rakecha have also joined the business from this year, starting April this year. So team is getting bigger in size, and looking forward to give you even enhanced and better service from going forward. So now talking about goal-based investment solutions that we provide, we essentially start with uh, the process starts with identifying your financial goals. Once your goals are identified, we actually bucket them or categorize them into three buckets, namely short-term goals, medium-term goals, and long-term goals. So short-term goals, when we say short-term, it is normally is within a year. Say if you're planning a vacation, maybe 6 months down the line, or say you want to pay off your dues, credit card bills, or you want to buy a car, say 1 year down the line. Those are, all are categorized under short-term goals. Then medium-term goals could be, say, planning for your child's education, higher education, or child's marriage, which is say 3-4 years down the line, or say you want to buy a house 5 years down the line. Those all goals are categorized under medium-term goals. And long-term goals are, it could be wealth creation. Say you are 30 today, and at the age of 50 you want to create wealth and be financially free. That will be a long-term goal. It could be a retirement goal also. So now once these goals are categorized for medium term and long term goals, we as SIP mode actually works very well. So you invest monthly towards your goals, and with periodically monitoring and reviewing your investments, which is part of the service we provide. uh, it is not difficult to achieve those goals, given that they because these investments give about 12 to 15%. That is what the expected return from our equity mutual fund is in the medium to long term. Now, for short term goals is one place where I got associated with Giraffe, and Giraffe is helping me out in uh, giving my clients such investment opportunities, which Saurabh will also talk about in the due course. So let me also talk about the mutual fund industry in brief. So mutual fund industry has assets under management of about 40 lakh crores today. You would be like surprised to know that it was just about 18 lakh crores 5 years back. So it has seen tremendous growth over the last 5 years. And mutual fund is not something which is new. It has got the investor attention maybe in the last decade or two. But mutual fund started with UTI in the year in the year 1963. So it is almost 60 years now that mutual fund is into existence in India. So now, talking about mutual funds, last decade itself has seen 5x growth. This is because investors like you have already accepted mutual fund as a mainstream product, and for most of the investment solutions, as I said, for medium term and long term goals, mutual investing through mutual funds or through the SIP mode in mutual funds is the best way of investing, because your investments get averaged out over time, so you don't have that risk of volatility. Actually, volatility becomes your friend, and in the long term, to get the average return, which helps you to achieve your goals. So now talking about short-term investments. Earlier, traditionally, people used to, if you want to say, as I said, if you want to buy a car, say 1 year down the line, you will normally start a recurring deposit that giving about 4-5% return. But the problem here is this return which you will get post tax will not even beat the inflation. So you are actually losing money over the period of 1 year. This is where alternate investments come into the picture. So with these alternate investments were earlier accessible only to ultra HNI, where you would have to invest, say, over a crore to maybe participate in the alternate investment space. So and alternate investments is also not new to the Indian market, but it was not accessible or democratized, say not available in small quantities of investment. So now what Giraffe is doing is Giraffe is making these investments in 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 a in a format where you can invest. You can start by investing just a lakh of rupees and test the product out. So now I would like to invite Saurav Ghosh. Saurav, I met Saurav in Goa in a business meeting last year, actually in the month of April last year. That is when I actually attended one of his seminar where he was talking about the alternate investments field which he is into. And from there, from the month of May last year, I started working with Giraffe. And as I said, the experience has been very good. So now I would like to invite Saurav Ghosh to first. I would like to introduce. Please introduce yourself, and then you can talk about alternate investments and how Giraffe as a platform or the investment opportunities that you bring in are actually trying out by most of my investors. Over to you, Saurav.
Thank you, Piyush. Thank you for your kind words. First, and thank you to everyone who's present on this call on a Saturday morning. So thank you so much. You can see the very good participation here. Very happy to be here. My personal background before I start talking about what alternative investments we provide and what these products are. Let me introduce myself. My name is Saurav Ghosh. I'm one of the founders of Giraffe. We are two co-founders, myself and my colleague Vineet Agarwal. My personal background is that I'm a computer science engineer from Pilani, Goa. Did my MBA from Ahmedabad, passed out in 2012. Post that 10 years, I was in the corporate finance space. I used to be raising capital for the company that I used to work for. So I've raised a lot of debt and structured credit, for companies. So from international funds, domestic funds, public sector banks, private sector banks. So my background prior to starting up with Giraffe was in structured credit and debt, and that is the experience that I bring on to Giraffe as well. And I will talk about our products. So quickly, let me just share my screen, and I will run you through a presentation quickly. Piyush, you need to allow me to, or Shantanu, if you're in charge, you need to allow me to present the screen. Yeah.
Saurav, you can present.
Yeah. Yeah. I hope my screen is visible to everyone. Yeah.
Yes.
So to begin with, so as Giraffe, we are trying to build India's largest fixed income platform. And what we mean by that is, today everyone is managing maybe their equity portfolio or your mutual fund portfolio. You manage it on Zerodha or an ICICI Direct or HDFC Securities, right? So that is where you're managing all your equity investments or mutual fund investments. But we want to be that one platform where you manage your fixed income or debt investments, and that's the vision with which we are building. The idea is to provide access to as many people out there to debt and fixed income as an asset class. What we have seen is in India there is very limited participation in fixed income, and largely because most of the products today that is available, they are not friendly or attractive for individual investor participation. What I mean by that is most of the products in the market are very long tenor. and typically they'll give you 7, 8, 9% yields, which are the bonds that are available. And you don't want to invest for 8, 10, 15 years in a bond which is giving you 7, 8, 9% return, right? So and that makes it very unattractive for most individual investors to participate. What we are trying to do as Giraffe is bring those very high quality curated products which are very attractive for individual investors. So they are curated with individual investors being the focus. So we know that individual investors are going to be investing in this product. So what should be the tenor of the product? What should be the returns of the product? What should be the security package so that we de-risk individual investors who are participating? So all decisions that we take while curating a product is with keeping the individual investor at its heart, right? Now, why is fixed income important? I think one of the key things has been that India has largely been saving their money in FDs, savings accounts, etc. So a lot of money in India is in these, in the fixed deposits and savings accounts. Also, what has happened in the last 10 years is with the all new age technology platforms like Zerodha, etc. There has been a lot of increased participation, like Piyush was mentioning, in equities as well as in mutual funds. But fixed income still remains underpenetrated. And few of the reasons why fixed income becomes very powerful already Piyush has mentioned, right? One of the key things is that you need to de-risk your portfolio from immediate short-term volatility, right? So equity markets is very great when you're investing for medium to long term. So if I have a investment horizon of more than 5 years or 10 years, then equity markets is great, right? But if I have an investment horizon of less than 3 years, equity markets becomes extremely volatile, and I'm not able to plan my how should I build my portfolio with a short to medium term view of it. And that's why fixed income becomes very powerful, because here you are getting returns which are non-volatile, they are predictable, and you are able to also get in the alternate in a fixed income space, you're also getting returns which are very similar to what equity markets will give you in the long run, right? So like Piyush mentioned, mutual funds give you 12 to 15%, over a period of time. Through alternative fixed income, you can get 10%, 11%, depending on your risk appetite, you can also get 13, 14%, right? So they are giving you non-volatile returns, they are giving you predictable returns, and they are allowing your portfolio to earn a bit higher return than you keeping that money in fixed deposits or savings account. Now, just if you see the bottom graphs, typically, as I mentioned, current portfolio mix of most investors here are, split between equity and debt, debt largely being fixed deposits and maybe some debt mutual funds. But typically, all global studies recommend that at least 10 to 20% of everyone's portfolio should be in the alternative fixed income space. Reason being, as I already mentioned, it diversifies your portfolio. So diversification in financial investments is the key. So it diversifies your portfolio, reduces volatility, and also gives you that delta return from, exposing too much of your portfolio to the traditional debt asset classes of fixed deposits or bonds, right? So that's where alternative fixed income comes. As Giraffe, this is a very overview of Giraffe, and now I'm trying to get into what we do as Giraffe. So as I mentioned, we are trying to build India's largest fixed income platform. What we do is essentially provide access to individual investors to a large set of opportunities in the fixed income space. How do we bring about these opportunities is the question. So on the other side, we work with a large set of companies. These companies we work with are across a variety of sectors, across a variety of even stage and scale, and I will talk about this in the future. So we work with a large number of companies and provide them various kinds of debt, debt money, right? And this debt money can be basically used for growth. It can be used for working capital for several needs for their own businesses. So we give these kind of, I would say, debt to companies, and then they get structured and packaged in a way that individual investors can directly participate. So where we add value as Giraffe is that everything that you see on the platform, that is curated by us. So that means it is exclusive to Giraffe as a platform, because we have met the company, we have originated the transaction, we have done the structuring, the credit and risk assessment, and after that we bring this product. Once we are comfortable that this is worthy for individual investor participation, only then this product gets listed on the platform. So you as an individual investor, you have access to a curated or a filtered set of opportunities that are brought to you by Giraffe, right? And in debt and fixed income, picking and choosing the right asset is very important, because the nature of risk that you take is credit risk. What I mean by that is you're giving money or loan to a company you are giving it basis the fact that this company will repay that loan to you with the promised return, right? So this is the risk that you have. You don't have market risk, you don't have macroeconomic risk to that extent, etc. But you're taking risk on a particular company, and that is where Giraffe is adding that expertise, where we are handpicking and choosing those specific counterparties or companies with whom we are comfortable, and we feel that it is okay for individual investors to participate in this risk, right? So that's the value that we add. These are all the products that we do as Giraffe, and I will, explain in brief. I'm going to leave a lot of time for Q&A because I think there will be a lot of questions and people want to understand different aspects of the business. First product is very basic T-bills and GSEC. There is nothing, I would say, new that we are doing here. These products have been there in the market for a long time, but why did as Giraffe, why did we actually encourage participation in T-bill? Because when we launched this product now almost a year back, we realized that in T-bills for a 90-day product, you are getting 6% return, which was, this is a year back yield, whereas HDFC bank fixed deposit for 90 days was giving you 4.5% return. So what that meant is, for taking government risk compared to a private bank risk, you're actually getting 1.5% more, right? So that's, and we also realize that individual investors don't invest in T-bills because of several reasons, and lack of awareness. It was also very difficult to participate. So we solved all those logistic aspects and we promoted T-bill as a product just because we thought it's better for individual investors. So our goal as Giraffe is to bring you products which are better than what is available in the market or which you might be unaware of, and T-bill is an example. Corporate debt, this is largely we give money to companies on their balance sheet. These are structured, so they are very, very, I would say there is a secure, strong security package. There will be identified cash flows from which the monies will get repaid. They will also have additional securities like personal guarantees, corporate guarantees, in some cases hard collaterals, etc. Right? So this is where we are giving money to companies on their balance sheet. So this is what corporate debt is. Typically, it is 12 to 36 months in tenure, and they are against identified cash flows or collateral, right? Corporate debt (CP). These are commercial papers are unsecured debt on the balance sheet. Again, mostly mutual funds have been investing in this product. Individual investors have not been participating. But here we actually bring you papers of very, very highly rated companies. They are AAA, AA rated companies, and you're taking a very short-term view of them, maybe 3 to 12 months. So you don't, will see a trip. And the kind of companies we have done is Tata Group, Carrot Lane. We have done angel broking, which is today they do a PAT of 300 plus crore annually, right? So these are the kind of names that you see, when we bring CPs out there with a very short-term view of 3 months, 6 months, 9 months, right? Invoice discounting. I think, again, a very, very traditional product. Banks and financial institutions have been doing this for decades in the country. Individual investors, again, did not have an opportunity to participate. The beauty of this, the beauty of this product is that, the tenors is 30 to 90 days. So you are able to participate in a opportunity or an instrument which is very, very short term in nature. So all your liquid money that you typically, maybe keeping in your savings bank account, some part of it you can allocate to inward discount, because in 30 to 90 days, you're getting significantly better returns, like between 10 to 13, 14%. The product essentially is that, there are companies who provide services or goods to larger companies, and they raise an invoice, and they raise an invoice to maybe a very large company, like it can be an HUL or it can be like these kind of large companies, and they expect the payment in 60 or 90 days. We discount these invoices and we give those companies money today, with the expectation that the HUL or etc. will anyway pay back in 60, 90 days on time, right? So typically, but this is unsecured in nature. So the benefits is short term, high return. Cons are it is unsecured in nature. So, you should invest with knowing underlying risk of each and every product. Leasing is again a very great, is a very attractive product for us. Again, investors don't participate typically because in this product, you actually own the asset, which you then lease out to a company. And because you own the asset, the nature of security and collateral is very strong. If, for whatever reason, the company defaults on the lease payment, you can sell the asset, lease it out to someone else. So there are a lot of things that you can do. So typically, loss of capital in this product should be limited, right? So and you at the same time you also get good returns of 12 to 18%, through leasing. The important thing is leasing to understand the underlying asset. you should invest in assets which have identified value. They have a good secondary market, and the secondary market has a good is vibrant as well, right? So if you get into assets which have a if you get into assets where either identification of the asset is difficult, and what I mean is it typically, let's say the asset is furniture, right? And if you're leasing furniture to a company, how do you know that which furniture is yours, right? It's very difficult to identify ownership of the asset. So identifying ownership should be easy. Second is it should have a good secondary market, and you should know what value you will get in the secondary market. If these three things work well, leasing is a great asset class to participate in, right? Venture debt, typically we got this product because obviously the startup ecosystem in the country was vibrant. We have only selectively done 2 transactions in venture debt because in the last 18-24 months, the equity market for startups has not been great. And that is why we are not comfortable doing venture debt to that extent. So we do very selectively. We have done only 2 in both these companies. They have gone on to raise further equity. So, the investments have been de-risked. But this is also a product, but over the next 5-10 years, I think as the startup ecosystem also matures, we feel there will be a lot of opportunity in this space. This is to give you, an understanding that what Giraffe is trying to do. What Giraffe is trying to do is actually enable every investor out there to create a portfolio of fixed income product. And any investment is not about an individual opportunity. For example, if you're even doing public equities, you buy Tata Motors share, you should not be betting your investment on the fact that Tata Motor will do well or not, right? So what you should do is pick 10 to 15 or 20 stocks, and then you see that as a portfolio, can I make money, right? So all investment asset classes, whether it is mutual fund, whether it is direct public equities, whether it is anything else, it is always about creating the right portfolio. And that is same for fixed income. It's not about making that one opportunity or investing in that one opportunity that gives you money. It's about creating a portfolio across different kind of risks, across different kind of tenures, so that your portfolio is well balanced. So as Giraffe, if you see today, we provide a wide range of opportunities, right from 6% to 18%. These are the different kind of companies with whom we have worked. So you should create, pick and choose, mix and match, and create a fixed income portfolio of your choice. You should have at least 5 to 7 investments across, maybe on Giraffe, maybe anywhere else, but you should have at least 5 to 7 investments so that your portfolio becomes well diversified, right? So if you see in this, like we've done Carrot Lane, which is a Tata Group subsidiary, we have done Angel Broking, we have done Jindal Group, which is JSPL Steel, Ugrow. 2, we have done, startups like a Wilcart or a eChargeUp, which are like Series B funded startups, right? So you can see the diversity of sectors, you can see the diversity of scale, and also the diversity of returns. So you can pick and choose, and create a portfolio that works for you. And as Giraffe, we will give you enough choice, for you to do that. There's a lot of text on this slide, but essentially what we wanted to highlight is anything that Giraffe brings on the platform, it goes through a very robust credit approval process. And typically it takes us almost 2 to 2.5 months to work with a company for the first time. Typically, till date we have worked with almost 40 plus companies, almost 45 companies. And to work with 45 companies, we have evaluated and met 500 of them. So if we meet and evaluate 500 of them, we end up working only with 40-45 companies, and that means that conversion is less than 10%, when we meet a company and evaluate them, right? So it takes us 2.5 months to actually onboard a company. There's a lot of effort that goes into understanding the company, their business, where the risk stands in their business, how healthy is their balance sheet, etc. And then obviously verifying all the information that they provide, right? So it's a very tedious process, rigorous process, but we know that this is the key because finally we are selecting and bringing companies that we are comfortable with, and that this is the key value add that Giraffe is bringing, right? So we know that we are dealing with individual investors' money, so we are very particular about this process, very rigorous, and ensure that we only try and bring the best quality companies to you. But at the same time, we are also not magicians. There will be cases where unexpected things happen, and that is why the need for portfolio diversification is important. We have a very well diversified exposure at our end as Giraffe. So we also expect you to have a well diversified exposure so that you continuously keep de-risking your portfolio. So that is always the key. In our journey so far, today we have more than 80,000 registered users. We have, done more than 1,500 crore of investments through our platform. Today, on a monthly basis, we do anywhere between 150, at least 150 plus crore. We've not had a single day delay, across our journey of now 2 years, right? So default is step two. We have not seen a single day delay, from the promise date, till now across all our investments. And today we are at a stage where we are processing 1 to 2 repayments on a daily basis, right? So we have repaid more than 900 crore of capital to our investors through the platform. We're repaying 1 to 2, repayments we are processing on a daily basis. And till date, across maybe more than over 500 milestones, we have not seen a single day delay. The reason why I'm stressing on this is not because I'm saying there will not be delays in the future or defaults in the future. These are possibilities. You should be aware of these risks, but you should also understand that these will be, I will say, one-off incidents that will happen, because obviously our processes are strong. So you should look at it from a long-term view. If you invest in any fixed income product over 10 years and keep continuously having a well-diversified portfolio, even with the one-off delay or default or loss of capital, you will still make those double-digit returns that you are expecting, right? Like, you don't expect every portfolio, every stock, every mutual fund of yours to do well. In some you lose money, in some you make money, but at an overall portfolio level, it becomes important to see what the outcome is. Similarly, in fixed income, if you keep investing consistently across a diversified set of opportunities over a period of time, you will see that you will make those double-digit returns. And that's the way you should think about any asset class, right? As Giraffe, today we are a team of 75 people, and I'll introduce the team as well. We are headquartered in Bangalore. We have a few people in Mumbai, Ahmedabad, Kolkata. My colleague Shantanu is on this call. He's based out of Kolkata, so he's there in person, accessible to each one of you. And please, he'll be happy to interact further as well. This is the team. I'm on this call. My other founder, Vineet. You see the entire team and leadership team that we have. Each one of us are seasoned professionals in financial services. We've had more than a decade of experience, each in debt and structured credit, and that is the experience that we bring on, when we do Giraffe, right? So we have all of us have seen multiple cycles. Whether it is 2008, then it has been, the ILFS crisis, so, and then COVID. So everyone has seen multiple cycles from a debt and lending side. We understand, what it means to build portfolios and what it means to, do debt and structured credit. And that is the experience that we bring, while we have started up Giraffe. As a startup ourselves, now we are 2 years old, but as a startup ourselves, we've been very happy that we've been backed by some of the largest investors in the startup ecosystem. So for people who know Accel Partners, they were the first investors of Facebook in the US. They are first investors of Flipkart, Swiggy, Urban Company. So they are one of the top global VCs, in the world. And we are very happy that, they are with us in this journey. And alongside that, obviously, we have several investors who are, well-known startup founders and have built large companies themselves. Right. So this is about Giraffe. As I mentioned, I've kept time for Q&A because I expect a lot of questions, because these are new products, and I will do my best to answer them.
Thank you so much, Saurabh. Saurabh, normally I get some common questions from my clients. So can I ask those questions first?
Please, yeah.
Yeah. So you mentioned about returns, which are fantastic. You talked about risk, which are inherently built in these opportunities. But you also said that there are no defaults and no delay as on date. So with clients, this actually clients at times get carried away by maybe investing in a few opportunities, just investing in one or two opportunities, putting all their money in one or two opportunities. So what idea and how should such investors or clients approach your invoice, say invoice discounting, for example, invoice discounting opportunities?
Right. Yeah, no, thanks, Piyush. So, see, few things, like, as I mentioned, I can't keep stressing about the importance of diversification in any financial investment. So you can't put all your eggs in one basket for any asset class, whether it is equities, mutual funds, fixed income, or anything else, right? So the importance of diversification, it has been spoken about. It remains the same for Giraffe as well, right? The way to go about building a portfolio is, the reason that we have kept 1 lakh as a minimum threshold is not for people to invest 1 lakh. we expect people to create portfolio of at least 5 lakh to 10 lakh on Giraffe and make this portfolio investing 1 lakh or maybe at best 2 lakhs across a set of companies. Obviously, the companies that you identify well with, you feel that is a good quality, you can take maybe a larger exposure of 2 lakhs or 3 lakhs. But for companies that are new to you and you don't are not aware of, you can invest 1 lakh and then kind of see that what your experience will be, right? But at any point of time, as I mentioned, you should have exposure to at least 5 different counterparties. And it is also important to have exposure to different products, right? So everyone likes invoice discounting as a product because you get, in 90 days you get 11, 12, 13% return. But you should also understand that is unsecured in nature, right? So you should also have exposure to secured products, right? So whether that is a corporate bond, that is leasing, or any other product, but you should also have exposure to different kinds of risks, and that becomes important. And you will see the benefit of that over your next investment journey of, let's say, 10 years, when you're participating in these products. So my advice would be that you pick, like today we work with about 40-45 companies every month, almost 15-20 different companies work with us. So you feel free to choose those 5-6 names that you're comfortable with, and build your exposure at a portfolio level across these 5-6 companies. So that's my recommendation.
And sort of when such opportunities come, two returns are mentioned. One is coupon and one is IRR. Can you explain a little bit about these two things?
Yeah. So why we use the term IRR, while we know that it is a difficult concept for people who are not day to day are not doing I would say investments or is in financial services, but we use the term IRR because that is the only relevant metric to compare returns with different tenures, right? So if you have to compare a return of a 90-day product with a 1-year product with a 3-year product, then coupon is not relevant. IRR is the only relevant metric to compare all this, right? So the difference between coupon and IRR is coupon is very simple. So if it is 11% coupon on your principal of 100 rupees, so you will get that. And if it's a 1-year, let's say, loan, you will get 100 rupees pay 11%, which is 11 rupees you will get as interest. So this simple calculation is the coupon, underlying coupon. So coupon is the actual interest that you get. If you multiply your principal outstanding with the coupon, that will give you the interest. So that is what coupon is. What is IRR? IRR factors along with coupon the time value of money. So what that means is the same 11 rupees that you're getting, if you get it, let's say if you get 11 rupees in 1 year, vis-a-vis the for 6 months, let's say 11% interest is 5.5 rupees. But if you get 5.5 rupees after 6 months and another 5.5 rupees after another 6 months, in 1 year you have still made 11 rupees. But the fact that you got 5.5 rupees after 6 months, that time value of money that can again be reinvested to earn additional returns, right? So instead of getting 11 rupees after 1 year, it is better to get 5.5 rupees after 6 months and another 5.5 rupees after further 6 months or 1 year later. That gives you the opportunity to reinvest 5.5 rupees that you have got after 6 months. So that's the additional benefit. That additional benefit needs to be captured in some metric, which is what we call the IRR metric, where it captures time value of money. So actually in investments, the relevant metric for everyone to see is IRR. So, because every time you get money, you can reinvest it and you can earn higher returns. But for individual investors, you can look at coupons as well, because it makes it easy for you to understand. But this is the difference. But if the right metric is IRR, if you ask me, but I understand it might be a bit difficult for people to understand.
Yes, thank you so much. So when I approach prospective investors, I get a common question that uh, if we invest through advisor or we invest through Giraffe directly, is there any difference in return that we will end up making?
No, so if you invest, so this is not like a mutual fund with a direct or regular plan. So if you invest directly with us on a platform or you do it through an advisor, you'll make absolutely the same return, right? So you can work with your advisors if they're hand holding you in several other ways and give you additional comfort. You can also check with them on, which product to invest in or not. So from a return perspective, it is exactly the same. So feel free to choose, what is the mode you like.
Now we can open up for Q&A session. So Shantanu, if you can read up the questions and Saurabh can answer.
I can read it actually, Shant. It will be just easier.
Yeah,
Yeah,
please.
that's
And
better.
participants, please put your question in the Q&A section so that we can answer.
So I've got one question. Which sector does your company focus on? As I mentioned, we don't focus on sectors. We focus on particular products. So corporate debt, invoice discounting, leasing, venture debt. And in that, we then have subsectors that we focus on. So if you see corporate debt, you will see a lot of investments in NBFCs, in manufacturing, and in real estate, right? So if you see invoice discounting, it is again a variety of sectors. Venture debt will typically be technology-led startups, right? Leasing is dependent on the asset, so we like to do cars, solar rooftop finance, etc. So we work across a wide variety of sectors. The important thing is working with the right kind of company. Second question is an interesting one. Why would a company seeking debt come to you instead of going to a bank, financial institution? Is it not because they do not qualify to get debt from them? So, and this has been asked by Mohit. So, Piyush Mohit. So, Piyush, it's important. This is a very good question because typically people feel that the new age platforms actually give money to people who don't get money. But that is completely not true. Every company that we work with, and I would say barring those, one or two startups where we have done venture debt, but more than 95% of the companies that we work with, they get money from, they are already having a banking line. So they have already taken money from a bank, and in spite of that, they come to us. So why have they come to us, right? In India, the problem and challenge is that the only meaningful capital provider in the country is a bank. And whether it's public or private, all banks work in a very templatized nature. And what that means is that you give them your balance sheet, you'll tell them this is the collateral that I can provide, and through a branch or through a RM, they will tell the company that this is the loan or debt that we can give. So it's very templatized. There is not a lot of interaction of these banks with the companies to understand their business, why do they need capital, etc. What this also means is that the debt or loan that they give is a simple EMI format. So if you take a 2-year loan from a bank, they will tell the company you pay me interest every month, and this is when you can pay me the principal, etc. Right? So it's very templatized in nature. It is not at all flexible. Typical timelines to get money from a bank can range from anywhere between 3-4 months to 6 to 9 months. So it's a long process, and typically the money that they will get will be a fraction of the money they actually need. So if a company needs 100 rupees to run their business, typically by doing all this, the bank will end up sanctioning them 30-40 rupees, right? So now for the company, they need 100 rupees for growth. What do? Right? So typically when companies come to us, they are coming to us for two reasons. One, they have not got adequate debt from the bank. Two, they have not the structure in which they get money from a bank is not relevant. So we are able to give them more customized or flexible debt. What I mean is that if we know, let's say, I'll give an example. Let's say a company is setting up a manufacturing facility. That manufacturing facility will take maybe a year or 2 years to stabilize and start throwing regular cash flow. The bank will say that you take money, but give me interest from tomorrow, right? That is not the suitable solution for the company. As Giraffe, what we are able to do is we understand their business. We know that this manufacturing facility will need time to stabilize. So we can tell them that, hey, you give us little interest for the first 12 months, or maybe in some cases, no interest, and start paying me interest once your cash flows start coming in from the facility, maybe after year one or later, right? And then how do we secure ourselves? Because we have given them this flexibility, something that obviously our team puts our minds to, right? So this kind of flexibility that we are able to give a company is something that they appreciate. And as I mentioned that, they are also not getting adequate capital. One of the statistics in India is corporate debt to GDP in India 17%. In the US is 150%. I'm not saying what US is doing is correct. My point is that India is a very credit-starved country for corporates because banks are the only meaningful capital provider. So there's a lot of credit gap in the country, and as Giraffe, we are also trying to solve for that. Why is this investment known as fixed income class? What does fixed income asset class mean? Fixed income as an asset class means any investment where you are getting fixed return over a fixed period of time, right? So that is fixed income as an asset class. When you invest in a fixed deposit, you know that after 1 year you will get 6% interest, right? Or after 6 months you will get so much interest, right? So in all of our asset classes, there are two constants. You know exactly how much return you will make, and you also know what is the tenure of your investment. So whether I'm invested for 1 year, 2 years, 6 months, and do I make 10%, 11%, or 12%? So both of these are fixed, which is the return and the tenure, and that's why we called it. That's why this asset class is called fixed income. Can you, okay, before that, say, is this SEBI regulated? So to answer this question, all products that we do, right? So we do corporate debt, whether we do invoice discounting, we use instruments like NCDs, which are non-convertible debentures. We use CPs, which are commercial papers. We use, basically invoices are RBI regulated and instrument by itself, right? So all at an instrument level, all of the instruments that we use have their own regulation that we are 100% compliant with, right? So when you invest in a product, you will like see these products are dematerialized. You will get the bonds in your demat account. They are fully tradable. So from a SEBI or from any regulatory body perspective, all our products are regulated. Now there has been a recent regulation of online bond platform also for platforms distributing these products. So there are two kinds. So as an individual investor, you are investing in all regulated products. So there is, that is 100%. And the other is as Giraffe, because as a digital platform, we are distributing these products. There's been a new online bond platform regulation by SEBI as well. Can you explain invoice discounting again? So in invoice discounting, what typically happens is there is a vendor and then there's something that we call an anchor. So let's assume that the anchor is TCS, right? So a vendor might be a small vendor, might be a large vendor, but the vendor is providing goods or services to TCS. And as per their own contract, TCS has a 60-day or 90-day credit period. What that means is that if the company vendor has provided goods or services today, TCS will pay them money after 60-90 days. Now for the vendor, this is a cash flow problem, because when they provide goods or services today, their expense has already happened. So they have already incurred the expenses in providing the goods or services, but they get money back only after 60 to 90 days from TCS, right? So here, because of this cash flow mismatch, they need capital today. So what they do is they come to us or maybe to a bank or anyone else to say that I have an invoice from TCS, which you can discount. What that means is that I promise you that when TCS pays me the money, you can take the money as repayment for the loan or debt that you give me today, right? So what we do, we give the money to the vendor today, knowing that TCS will give the payment under the invoice after 60 to 90 days. So that payment then comes directly to us, right? So this is invoice discounting. You are essentially bridging a very short-term working capital problem for the vendor, right? I am from Dubai. Can I also invest in these alternate investments? So for NRIs, we bonds which we do on the platform or NCDs, which is corporate debt, those instruments are not permitted. So if you are, but that is if you have a NRI status as well, right? But you can invest in the other products. How are products selected? What are the criteria? So typically what we do is, it is a very broad question, but as I mentioned, typically when we meet a company, we assess what their actual requirement is. Why do they need money from us or for anyone else? And then we try and give them a product which will work for them. So sometimes people or companies also know that they need money. They don't know which is the right product for them. So whether leasing is so if they say that I need money for capex, for example, a company says I need money to buy 10 cars. We said then leasing is a better product for you. If you need money for working capital, then invoice discounting is a better product for you. If you need money for growth, where 1, 2, 3 years, maybe corporate debt is a better product for you. So it is dependent on what is the need, what is the utilization of debt for that company, and that is how then we select which is the product that we will give them. Criteria are very wide ranging. We do other webinars on our credit process and etc. Typically for us, if I need to tell you criteria in one line, we assess the capability and the intent of the company to repay debt. So if both capability and intent is something that we have confidence on, that is when we are giving them money. Now that comes from multiple of things, and so that will become too long to answer right now. What is the revenue model of Giraffe? Very good question. So what we do typically is that we agree on a cost of capital with the company. So the cost of capital with the company, let's assume, is 12%. Giraffe will then then we tell the company, you pay us 1% and you give 11% to the investors on the platform. So today we don't charge anything from the customers or users on our platform. The company is paying us a commission for obviously arranging the capital for them, right? Typically, Giraffe on every investment makes about 1 to 2%. So based on the question of Piyush, I understand Giraffe does not charge any fee. We don't charge any fee from our customers. We charge fee from the company, which I just explained. Do we have a single fund structure like structure for the bills, which could have the diversification across companies, even for a single small exit? Yes, so in the future, we are also doing, we will bring you baskets of fixed income product. What I mean is we will give you, like 4 or 5 different products into one investment so that you yourself get, you are yourself taking a diversified exposure with every single investment. So we are working on it. There are a few logistic challenges that we are solving for, but in the next 3 to 6 months, you will see a lot of these baskets of fixed income that we offer on a platform that will make it easier for you to invest. What advice do you give beginners who have started investment? If you are a beginner and who have started investment, I will suggest that this is not the right product for you. You should start your investment journey with fixed deposits. Then you should start doing mutual funds and SIPs. Maybe understand equity market better. Once you have done all the traditional investment products, then you can come and start exploring the alternative fixed income space, because these products are still new. People, even financially savvy investors are still understanding these products. So maybe in a couple of years, once you have dabbled with fixed deposit, SIPs, mutual funds, equities, post that, this may be a right product for you. So I will recommend anyone who's a beginner to, maybe try all other traditional products which everyone understands out there. And I'm sure Piyush can, help you out with it. Which factors do you consider while undertaking a rigorous review of investment options? How easily can we withdraw money that has been invested through your platform? Factors that we consider, like I said, it's a long question. We keep having webinars on our credit process, which itself is a half an hour to a 1 hour discussion. I've already answered that in brief. How easily can you draw money? We are not providing liquidity as an option. All investments on our platform are hold to maturity, but all users who have participated till date has not had this problem, because all investments are generally short term in nature, right? So typically you see products which will be less than 18 months. Even the ones which are 12 to 18 months will have a monthly payout or quarterly payout, and you exactly know that the money will come on so and so date. So typically people have not had this problem. They are very happy to invest, and keep the money locked in for this short term duration. So we are not giving any liquidity. When you invest, your money will come as per the repayment schedule, right? Not before that. And when we solve and if we start providing liquidity, then obviously we will intimate all investors. At the moment, we don't. For invoice discounting, do we discount only accepted invoices, and what checks are done to ensure no overdue invoices discounted? Yes. So, again, a good question. So, we only discount invoices which are accepted by the anchor, because typically in invoice discounting, there are a lot of issues around, disputes between the vendor and the anchor, whether the service was provider, what is the quality of the service, etc., etc. So we only discount invoices which once are paid, and we don't discount overdue invoices, right? So we will discount invoices which are typically 3 to 4 days old, because the invoice got raised, it got accepted, and then in the next 3 to 4 days they come to us for discounting. We don't discount invoices which are 30 days old, 60 days old. So definitely not something that is overdue. Can you elaborate about the taxation of each product? All products on our platform, you will get taxed as per your tax slab. So because this is fixed income in nature and all are less than 3 years, now the budget and the finance bill also, all debt product less than 3 years, you will get as taxed as per your tax slab without any indexation benefit. We believe that in the coming few years, this will also improve, because governments also want to deepen participation in debt markets. So we believe there will be more parity in taxation between equity and debt. But as of today, your tax as per your tax slab. So whether it is 10%, 20%, 30%, or 40%. Do you also take some collateral from companies or any kind of security? Yes. So as I mentioned, in corporate debt, typically, or in leasing, we own the asset. In corporate debt, we take hard collateral, personal guarantees, corporate guarantees, charge on cash flow, charge on assets. So invoice discounting is unsecured in nature. In venture debt, while we have charge on asset, but because they are startups, those assets are not very meaningful. So you can think of it as unsecured in some sense as well. So it depends from product to product. All of that is very clearly explained on our platform. When you will be, you can go through the platform, go through the information on our website. All of this will be very clearly laid out. Why your team of investors are only male? So again, a good question. Actually, our leadership team has it's not by choice or focus. It is basis of the people that we meet. And unfortunately, in India, at more leadership levels, we need more women. But it is basis on the interviews and on the kind of candidates that we get. In fact, one of the most, I would say, less represented people in investment space and in our, especially in finance, are females see limited, I would say, participation. But in our investment team, in fact, 90% of our investment team itself is females, right? So it's not by choice. I think we have a very healthy diversification, but it is a outcome more than a conscious choice, unfortunately. What was your turnover? Sorry, this is this is private data, so this I will not be able to divulge. For individuals, does Giraffe charge commission? If so, what percentage? We don't charge anything to individuals. What would be a suggested ratio for small funds to invest 3 to 4 lakhs? As I mentioned, if you have 3 to 4 lakhs, please invest 1 lakh in 3 to 4 opportunities. It doesn't matter what those opportunities are, but you should do it across 3 to 4 opportunities. What is the minimum ticket size? What is the average investment tenure? Minimum ticket size is 1 lakh. Average investment tenure ranges. So we have an average investment tenure across all our products is 7 months, right? So, but we have right from 30 days to 3 years, right? Want to understand if Giraffe also facilitates strategic trades like duration bonds where bond price are expected to increase. So currently we don't, because we are not getting into I would say more complex products. We want to keep products simple today for individual investors to understand. But as we become that one platform for everything fixed income, we will start providing duration bonds, perpetual bonds, everything, right? What is the taxability? I've already answered this. So this was the last question. Okay, one more question has come in. What percentage do you charge for invoice discounting? As I mentioned, across all our products, average is about 2%, 1 to 2%. So typically, if the product yield is 8 to 11%, we will charge 1.5%. If it is 16 to 18%, we typically charge 2.5%, and the ones in between we charge 2%. So on an average across our portfolio, the fee or income that Giraffe earns is about 2%.
Yeah. So
I think,
yeah, so that ends
I
all
think
the
this is the
questions.
last question I will take,
Yeah.
since it's already been typed, but I will not wait for questions after that. So what is your long-term goal as a business? What services do you plan to add? See, long-term goals, as I mentioned, we want to become that one platform for everything that is fixed income. We want to be your one-stop solution for your fixed income or debt investments. And we hope to offer all kinds of products to you so that you can create a good portfolio, right? We want to democratize and make fixed income as an asset class that is widely understood and that is accessible to every investor in the country, right? So that's the goal. That's what we are building towards. In the future, you will see a lot of services that we will add services like dedicated RMs. We will also give you a lot of information through our technology platform, and we will also bring products which are more retail friendly, which is not so complex. So we will keep creating pools, baskets, like basically mini mutual funds, so that you are able to participate in a easier manner. A lot of problems also will get solved by technology, where reinvestment, etc., will become much easier on the platform going forward, right? So these are some of the things that we will add, and hope to. My request to everyone on this call is, whoever understands this product in some limited sense, please start with a very small 1 lakh. Take Piyush's help to understand what we offer. He's had now a journey of 1 year with us, right? And you can start your journey in a small way. And as and when you build comfort and understanding of the products, you can see how you would like your portfolio then to shape up, right? But start small, build comfort. The investment is always a long-term journey. There's no need to act fast on anything, right? So thank you so much, everyone, and over to Piyush again.
Thank you so much, Saurabh, and thank you to all the participants who had put up the questions, relevant questions, which were answered by Saurabh. So I'll be sharing my link. If you register on the Giraffe platform using that link, you as an investor will automatically be mapped to me, so that I also can keep a track and advise based on your risk appetite. And if you need any support, or anytime you can reach out to me. If you have any further questions regarding Giraffe or its products, you can reach out to me on my personal contact. And this was the first episode on alternate investments. We are running a series where we'll be covering another thing on alternate investments next month. Next month will be about P2P lending. So every month for the next 6 months, we'll be covering different investment opportunities or different things on alternate investments. Lastly, thank you to all the participants, and thank you, Saurabh, for taking time out and attending this webinar. Thank you so much.
Thank you, everyone. It was a pleasure to be here. Thank you. Bye.